Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Ashraf Arifai bin Ahmad Tarmizi. My metric number is 240046263. My department is Bachelor of Sharia. I would like to share about challenges and opportunities of Islamic banking and financial in Malaysia, which is my topic for today. So firstly, what is the background of the Islamic banking? So the background of the Islamic banking has been started since the time of Prophet Muhammad SAW. He started as a businessman trading from one country to another. He shows how to trade and how to deal in the business using a Sharia way. The Islamic finance has expanded widely until the modern world now. In 1963, the first financial institution which worked under Sharia principle was established in Egypt, Mid Ghama, a savings institution that operated under cooperative basis, allowed their depositors to take out small portion of loan for productive usage and to provide possible return on the money of depositors. The saving project ran on a profit-sharing basis. Islamic financial service were also began in Malaysia. In September 1963, Perbadanan Wang Simpanan Bakal-Bakal Haji, which is PWSBH, was set up. This was the first Islamic banking in Malaysia which established for the purpose to assist Muslims to save their Haji expenses to pilgrimage to Mecca. In 1969, Lembaga Urusan dan Tabung Haji, now known as Lembaga Tabung Haji, established as results from the merging between PWSBH and Pejabat Urusan Haji. So now, let's see what is the challenges of developing Islamic banking and financial institution in Malaysia. So number one, limited market, based financial intermediation and products. The banking system has been established to work as intermediaries between customers and the financial institution. The financial intermediaries have an important role to the overall economy in the country. In case of Malaysia, Malaysia has a unique financial system. The financial institutions in Malaysia have full-fledged system, dual banking system, and subsidiaries. Most of financial institutions, for instance banks or insurance companies, offer Islamic products. The Central Bank in Malaysia approved most of conventional banks in Malaysia to offer and sell the Islamic banking product. The major responsible of financial intermediations is to match the demand of borrowers with depositors. The amount of funds contributed by each of the household depositors is limited. In order for the financial institution to borrow funds to the deficit units, financial institutions have to pool the limit resources provided by small depositors and repackage them into larger size to lend to borrower who demand for great amount of funds. So the number two is financial institutions safeguard the resources of depositor. Financial institutions provide security to the resources of savers. All the commercial banks, together with the leasing, financial institutions have to operate under Banking and Financial Institution Act 1989, Malaysian Anti-Money Laundering Act 2001, and Corporate Governance. In addition, financial institutions provide liquidity to the consumers by transforming their assets into cash via payment tools such as ATM machine, checking accounts and debit cards, and etc. Liquidity defined as the period taken for an asset to turn into cash. Let's go to number two. The number two is misunderstanding and lack of standardization of Islamic financial concept. Some people misunderstand the concept of Islamic financial institutions. They thought that Islamic financial institutions only available for Muslims. Although Islamic financial institutions are compliant to Sharia law, there are approximately 50% of Islamic finance customers own high school certificates, and approximately 50% of them achieve bachelor degree education level or above. It indicates that education is an essential tool to boost the awareness of Islamic banking. Some people's hard to differentiate the operation concept between conventional and Islamic financial institutions, and they deem that Islamic banking is merely a change in name without any other special features. They argue that the profit rate used under Islamic banks is just a substitution for interest rate under conventional banks. Hence, they claim that the operation of Islamic banking in Malaysia involved with interest link. Usually, most of the conventional banks offer the Islamic product based off different terms, for example, wadiah or saving account. Most of the window or subsidiaries will use the familiar terms for market the products. Currently, in Malaysia, there are a significant number of Islamic banks operating in the country. The Central Bank of Malaysia established and introduced wakaf and zakat to the transaction in the banks. Islamic banks in Malaysia have offered to their customers to place deposits as wakaf contributions. These activities are the new innovation to bring forward the new product under Islamic banking. So the number 3 is concentrated banking, limited risk management functionality. Islamic banks often concentrate on a few selected sectors and avoid direct competition, as one Islamic bank may focus on information technology sector in financing, while another Islamic bank might do the same financing and the agriculture sector. This practice makes functionality of risk transfer is very limited because of the no organized markets for offloading risk to achieve diversification. Hence, Islamic banks are easily exposed themselves to cyclical shock in a particular sectors. In accordance with a small number of sectors, it will appear the problem lack of diversification increases their exposure to new entrants, especially foreign conventional banks that are better equipped to meet this challenge. Challenge number 4 is legal challenge. Islamic banking is lack of effective supervisory framework, and it is one of the weaknesses of the prevailing system and deserves serious attention. The roles of both the Sharia advisory boards and the central banks need to be streamlined and strengthened. Islamic banks have devised their own practices and procedures to accomplish their banking activities. However, commercial banking and company laws appropriate for implementation of Islamic banking and financial contracts do not exist. Hence, that depend the problem of tax discrimination. Islamic banking contracts are treated as buying and selling properties and hence are taxed twice. The commercial, banking and company laws contain provisions that are narrowly defined and prohibited the scope of Islamic banking activities within conventional limits. It is necessary that special laws for the introduction and practice of Islamic banking be put in place. Governance issues are equally important for Islamic banks, investors, regulators, and other stakeholders. The role of Sharia boards brings unique challenge to the governance of Islamic financial institutions. The legal framework of Islamic banking and finance might include the following: Islamic banking codes, Islamic banking laws, Islamic banking balance sheet, monthly payment agreement, and PLS deposit. So next, we go to the opportunities in Islamic banking in Malaysia. Islamic banking also has several opportunities that can be used to strengthen and expand their role and contribution in the modern world. The growing Islamic financial ecosystem in Malaysia has the potential to attract more investment not only from Islamic countries but also among investors who care about ethical principles and social responsibility. So firstly, the opportunity in Islamic banking in Malaysia is growing demand. There is an increasing demand for Sharia-compliant financial products, especially in Muslim-majority countries, providing a significant market opportunity. Growing demand refers to an increase in consumer desire for a particular product or service, which can be driven by various factors such as changing consumers' preference, rising income levels, effective marketing strategies, and overall economic conditions. When demand grows, business often experience higher sales values, which can lead to increased revenue and profits. This growth can prompt companies to expand their operation, innovate their offerings, and adjust pricing strategies. Additionally, a surge in demand may attract new competitors to the market, intensifying competition and potentially benefiting consumers through improved products and services. Number 2, financial inclusion. Islamic banking can promote financial inclusion by offering services to those who prefer ethical banking practices aligned with their belief. One example of Islamic banking promoting financial inclusion is the provision of microfinance products through institutions like Bank Negara Islam Malaysia Berhad. They offering finance options that comply with Sharia law, such as murabahah, which is cost plus financing, and mudarabah, which is profit sharing, specially designed for small entrepreneurs and low-income individuals. Thirdly, sustainable finance. Islamic finance principles encourage ethical investments, which can socially responsible investors looking for sustainable finance options. Islamic finance principles encourage ethical investments, making them highly attractive to socially responsible investors seeking sustainable finance options. This principle prohibits investment in industry considered harmful, such as alcohol and gambling, aligning financial activities with moral standards. Additionally, Islamic finance emphasizes risk sharing and community welfare, promoting investment that contribute positively to society. For example, funds raised through sukuk, which is Islamic bonds, are often directed toward socially beneficial projects such as renewable energy or infrastructure development. This alignment of ethical values with investment opportunities not only allows investors to reflect their belief in their portfolios but also supports sustainable economic growth. And lastly is technological advancements. The integration of technology in banking, which is fintech, can help Islamic banks improve efficiency, customer engagement, and service delivery. The integration of technology in banking, especially through fintech, can significantly enhance the efficiency of Islamic banks in several ways. Additionally, user-friendly digital platforms enable better customer engagement, allowing clients to access services anytime, anywhere, and providing features like real-time transaction tracking and personalized financial advice. In conclusion, the landscape of Islamic finance and banking present both significant challenges and unique opportunities. Challenges such as limited market-based financial intermediation and products, misunderstanding and lack of standardization of Islamic financial concept, concentrate banking, and legal challenges must be addressed to ensure sustainable growth. However, these challenges also pave the way for opportunities, including growing demand, financial inclusion, sustainable finance, and technological advancement. By navigating these challenges effectively, Institutions can leverage the growing demand for Islamic finance and position themselves as leader in a rapidly evolving market. That's all from me. Thank you very much.